All right, we're back for another episode, and we're just going to keep the train rolling on talking about housing costs. We had more questions than we had time to get to in the last episode, so we wanted to talk a little bit more and expand upon some of those unexpected costs that come up with home ownership. Some of them are, one-time events. Others are, political or, county related changes that could happen. And then, of course, there's just the things that never go away, like insurance and maintenance. So, yeah, well, why don't you kick us off, Elliot, and just, talk a little bit about your experience with that since you've owned your townhome in Seattle for quite some time now. And as we talked about last time, you're in the thick of the home buying process again.
Yeah, so Matt, we were talking a little bit before this. I think something to be aware of is property tax increases. Sometimes when people buy a house, they see the total payment escrow. So the idea of property taxes and insurance being paid for you as part of that monthly payment, but only a portion of your mortgage is fixed, the principal and interest part. There's the other two components of property tax and insurance that can increase and probably will increase over time as property values rise. I should say if they're going to rise. Disclaimer there, compliance, right? And so that's something to be aware of. And I was noting sort of the regional differences, maybe that when I bought my Seattle townhome, I didn't see an instant increase in the property taxes. Sometimes places get reassessed the year after you buy it. So the property taxes you see online sometimes are a much lower value of for the current owner. And then the moment you buy it, well, I shouldn't say the moment, but the year after, Matt's raising his hand here because he's experienced this. Why don't you tell us about your experience with that?
Yeah, yeah. So, I mean, I think there's a couple of disclaimers here. Like, first and foremost, if you talk to your realtor, they should know how this goes in recent history. Your lender, a good one, anyways, will probably have some idea of that. But yeah, for instance, when we bought our home in 2022, everything stayed the same up until this past January, where our property taxes went from $460 a month up to $554 a month. So that's almost
Whew.
$100 a month. And like we talked about in that last episode, if you've already pushed a lot of your income towards the mortgage payment itself, if you lose another $100 now, and maybe your raise at work helps a little bit with that, but what if you don't get a raise? Now you have even less to pay for groceries and the other things that keep life going around. So that's a recent experience. Thankfully, we haven't had any like property insurance increases. I think that's partially because we're in like a townhome and there's not, a ton changing inside of the house. And I think we could have a whole conversation about different types of property and how they're insured. But yeah, that's been our experience. I mean, we haven't had too many things, break. We had to add some radon mitigation, which is so much a thing here in the Midwest. That was like $1,500, the day we moved in. A couple appliances have gone down, but I know we wanted to start with property tax. So sorry for going down my tangent there.
No, I like it. I think it gives a good preview, but I think it's also important to keep in mind, let's say you're a retiree and you're thinking about moving somewhere else. The other thing to keep in mind in surprises is property taxes can vary significantly from state to state, county to county. That's something that took me off guard out here because property taxes are almost double where I'm from.
Yeah, yeah. Yeah, and it's really funny, and I'm not here to, tear down Texas and their sense of independence. So apologies in advance if anyone from Texas is listening to this. But, it was one of those things where when I first moved there, everyone talked about, oh, no state income tax. Like, and then I briefly thought about buying a condo there, and I saw how much property tax was, and I'm like, whoa, like, yeah, so maybe Texas listeners last time laughed and said we don't have state income tax, but your property taxes are probably quite a bit higher than ours here in the Midwest, and that's one unique thing too that I learned working with clients from Texas is when you get to retirement age, you can actually freeze some of those property taxes based on like your local taxing authority, usually the city or the county level. But the second that you sell that house, that new homeowner could have a world of pain coming for a property tax increase when that freeze is no longer there and they start to catch things up.
Yeah. So I think the main thing here to keep in mind is the property tax you see currently is probably not going to be the property taxes that you're paying a year or two from now. And it's good to budget for that. But I would also say as home prices rise, like they've done the last few years, your property taxes are probably also going to rise. So that's something to keep in mind that can come as a surprise. If your home appreciates a lot, it's not necessarily cash in your pocket, but it's cash that you'll need to be paying for those property taxes.
Yeah, and Elliot, I know this is a really tough question to answer, and I don't think we get it from clients too much, but I know we think about it. But how do you think about, like, we're in our 30s, right? Like, how do you think about that expense when you get to retirement? Like, I mean, it's something to think about, but it shouldn't worry you too much, right?
Yeah, I've never really run into anybody who's been particularly worried about property taxes. I know it does come up, but I think a lot have budgeted for those increase in property taxes and know at some point that their home has appreciated, so they can use that value at some point in the future and the equity that they've built up. So it's not like it's lost forever.
Yeah, yeah, but it is something just to keep in mind. Like
Definitely.
the increases will be expect unexpected at times, but the expense being there will never be a shock because it's always going to be there. So let's move on to maybe some of the more variable expenses, and I think we'll just go up the scale in terms of variability and cost. But let's go to home insurance next. I think it's been a really interesting one for the past 4 or 5 years as we went through the pandemic. But what would you want our listeners to know about some of the unexpected things that, I mean, insurance is there to protect unexpected things, but it's not exactly the most predictable thing itself. So why don't you start with some tips there?
Yeah. So again, this one's going to be highly region dependent. And what I mean by that is depending on what sort of risk you're facing. If you hop on Reddit and look at an insurance forum right now, people in California and Florida are hurting badly with those increases. People are seeing hundreds or thousands of dollars of increases because of the risks of hurricanes and needing to repair roofs or California and wildfires. Some carriers are not choosing to renew people's
Mm-hmm.
policies or dropping them altogether. There's just not a lot to buy out there. So I would just pay attention to where you're buying and what sort of are the flood risks, what are the fire risks, and then count on maybe your insurance premium increasing over time as we see potentially more weather related events that can affect the pricing that you're getting. What would you
Yeah.
add?
Yeah, I think this is a really easy thing to do that won't cost you much time and it will not cost you any money. But I would reach out to either your current insurance provider or a couple of them as you're going through the home searching process and just ask for a quote on a property. They'll be able to know, like, the zone, like if there's flooding zones or anything like that you need to be cautious of. They'll also know the cost to replace or reconstruct the house, which is a huge factor in determining your premiums. And also I doubt they would share that with you before you bought the house, but they would likely have any claims history related to that property. So you might be able to get a sense of, is the roof recently repaired due to a windstorm or hail damage or anything like that. They might not give you all that information at the start, but I think those are some really interesting pieces of information you can get before you actually purchase the house.
That's a really good one, Matt, and I'm glad you brought that up because there are some homes that chronically have these same issues over and over, and that might give you pause on making an offer during that process.
Yeah, and you just never know. I mean, I've just heard some crazy remodel stories in the past. So, flooding basements, just roof issues. Yeah, it
Yeah.
it can be it can maybe let you know if you're walking into a problem house before because the seller's likely not going to say they've had nothing but issues with that house, other than what they
Definitely.
legally have to say, right?
Yes. Yes.
Yeah. Yeah, and to that point too, I think it's something whether you own a home now and are looking to switch homes, or maybe you're a first time home buyer, like houses have just gotten more expensive in part due to the fact that building materials and labor has gotten a lot more expensive. So that's actually something we did a lot of reviews with our clients on during the pandemic because when lumber, for example, got so high, we wanted to make sure that those coverages or those replacement cost coverages to rebuild the house in the event of complete destruction were actually enough to get the job done with higher building materials and making sure there were inflation riders and things like that on those policies. Have you seen anything unique, Elliot, or even with your own policy since the pandemic? Has anything changed?
I mean, when I bought mine, I bought sort of at the top end of what we wanted to insure for. I tend to be pretty conservative with that stuff. And so nothing changed on our policy. But I do notice for a lot of other policies that I've reviewed that the dwelling coverage amount is far under what it should be because it hasn't really kept up. Sometimes insurance companies will increase that, sometimes they won't. But even when they increase it, sometimes I've noticed that it's far under that. And I give the example of Seattle just because I don't know building costs here quite as much, but $300 a square foot back in the day might have been okay for Seattle. That's not the case in most circumstances anymore. It's probably going to be hard to find a contractor to come out for $300 a square foot. So if you take your square footage, multiply it by 300, 400, 200, wherever you are and what it costs to rebuild, does your dwelling coverage actually match that? Do you have things like extended replacement coverage that might cover 20% more? Do you have a cash settlement option? Sometimes there's companies that is sort of the unique feature to your question earlier that you could have where if your house burned down, theoretically you could sell the land and the insurance company might give you cash for whatever the dwelling coverage is. And then you can go do that to buy a new house as opposed to waiting to rebuild your own house.
Yeah, yeah. I think we need to do a whole episode on like insurances because I mean, like with cars being so expensive too and rental cars being hard to come by, like, yeah, there's just so many interesting things that have changed with the shortages and the price increases since the pandemic. But yeah, I want to go back to that first point as we transition into other unexpected home costs where you mentioned like Florida and California are just these insurance wastelands, so to speak, where it can be hard to even get a policy for your house. I've actually had clients where the insurance company would not renew them
Yep.
unless they went out and cut bushes away from their house because they were so at risk of being in a wildfire zone that the insurance company saw those bushes as kindling to just burn the whole thing down.
Yeah.
And you can either spend a couple of weekends cutting those bushes back or you're going to have to pay someone. So, let's transition into some of those other unexpected house costs that might pop up, Elliot. And I guess we'll start with you. I mean, I know I shared a few things that we knew we had to do once we moved in, but you've owned a house a bit longer than I have. So what are some things maybe that you knew could break but weren't really expecting or didn't know when they would break?
Yeah, my immediate thought goes to appliances. So, our townhome, I think, had the original stove, dishwasher, basically everything. So we knew it was only a matter of time, and it was about 20 years old. So I think the first thing that went for us was the laundry. And to be honest with you, I started looking at what repair costs would be for laundry to have someone come out. And by the time you factor in labor and all that, in the time to do it, I just decided to replace them. I know that might be a little bit wasteful, but I think I would have spent more actually trying to repair that than just going out and getting brand new ones and having those delivered. So that was the first thing that came off guard. And it's not pleasant, but those aren't the end of the world in terms of housing. Those are pretty minor costs.
Yeah, but those, I mean, nowadays, what, a washer, dryer, dishwasher, it's probably going to be, I mean, a dishwasher, maybe 500 to 1,000, but
Yeah.
I don't know. You go to Costco or Best Buy these days, and there's $2,000, $3,000, $4,000 fridges. I don't know. Like, I don't know what is better about a $2,000 fridge versus a $1,000 one, but they're not cheap. And I want to share one piece on that because this is a funny story about the acquisition of our house, but the seller accidentally wrote in like a washer and dryer into the offer. It said all appliances, but they had been renting this place and those were actually the tenant's washer and dryer. So I just want to add a note, like, make sure you know what appliances are in your offer, especially if you're selling, I guess. But as a buyer, those might be things you need to buy if your house doesn't come with a stove or like a fridge or washer dryer. And then also they had accidentally put in a home warranty into our offer. So those are very commonly sold at closing or right before by either the agent or, some service that they contract out with. But even with that, Elliot, like you said, like they're not as great as they may seem. Anytime, like we had the ice maker go out in our fridge, it was like a $75 deductible just to get the guy there. So, the part was $120. Like we didn't have to pay for that, but we still had to pay, 60% of the cost just to have the guy come fix it. So, those just make sure you know the terms of some of those things if you're being sold those products. I'm not a huge believer. I think you're just better off budgeting and saving for those bigger things. But have you come across any of that with clients, Elliot, or just in your own experience?
Uh, we have some friends who bought a house recently who had a home warranty, and I think it's worked out pretty well for them. But I'm sort of the same mindset that I'll probably just budget for it. If it comes with the house, great. And some
Yeah.
sellers are offering that for like a year.
Yeah. 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 What other expenses have you seen out there, Elliot, that you'd want our listeners to know about?
Um, maybe this isn't unexpected, but I think as you're going into the house, trying to decide what changes you want to make or not make,
Mm.
and that comes to furnishing or changing. Like when we moved into our townhome, I had always heard from people like make the changes up front that you want to make. I've also heard live in it for a while and then figure out what changes you want to make. So it makes it very tough. But I sort of dissect those two things and figure out what can be done easily up front and what can be done later easily or that you might want to do. So we did carpets, we redid the floors. Uh, I really wanted granite countertops. We had these tile things that were really hard to clean. So those were changes we made up front. That was a big upfront expense that we had budgeted. So I won't say it's unexpected, but that's something to keep in mind that if you move into a house you don't like, you start living in it, you hate a component of it, you've already moved all your stuff in, and now you want to change it. There's a time and there's a cost factor of trying to like, let's say you do want to replace everything or paint. Now you're moving rooms around, you might have to hire movers to move stuff. It's tough.
Yeah. Yeah, and also I want to speak to painting because I used to paint houses in college, so I painted our house. But that is a lot cheaper than hiring a crew to come and paint your whole house in a couple of days. But yeah, I think that's a really good point. Like, do some of those things upfront and budget for that ahead of time because, like, you're not gonna want to paint after you get all your stuff in there. Like, you're not gonna want to, tear all the carpet out now that you have to move everything that is on top of the carpet. So, yeah, definitely budget some of those pieces in. And Elliot, is your townhome in Seattle? Is that like part of an HOA or how is that structured?
So technically it's not, which is part of the reason we bought it is I didn't really want to deal with that. It's only a few townhomes. It's not a
Yeah,
huge, but it's sort of complex.
yeah, yeah. So you haven't had to deal with that. So I guess
Yeah.
I'll
Tell me
just
about your experience though.
yeah, yeah. I wasn't trying to tee myself up there. I genuinely didn't know the answer to that question. Um, but yeah, I mean, it's one of those things where we should have talked about this in the last episode, but there were even some challenges like with the financing on that, just because at the time, the prior owner had owned the majority of our eight house HOA, so we're a very small HOA. But that forced us to put a little bit more money down. So I would actually classify that as a unexpected expense, just because
Yeah.
we had to go with a different type of loan. We couldn't do traditional financing. And then the second thing on that is, I don't think our HOA is like overly needy or trying to do anything too crazy, but there are times where you can get special assessments for projects that maybe you're not 100% on board with because if the board votes majority to put in new rocks around the landscaping, that could cost you several $1,000s. And we're kind of in that situation now where the roof does need to be replaced. We have quite a bit of money in the reserve, but not enough to keep the reserve level that we want. So we're probably going to get special assessed here in the next couple of months to chip in a few grand to repair the roof for the 4 units that are part of our building. So those are some things that you'll just want to keep tabs on. And certainly, again, a good realtor should be able to help you understand like how adequate or healthy the reserves are, and your lender will probably look into that too before you ever get approved for financing if that's the route you're going. So Yeah.
Matt, you brought up a great point there with HOAs and reserves, and you used a lot of terms that I don't know if
Yeah.
everybody necessarily will know. Do you mind maybe talking a little bit about what a reserve is, what a special assessment is, how those are
Yeah.
determined, what you can do to look into it?
Yeah. So, yeah, there's a couple of different things to think about. And I think when a lot of people think of HOAs, the first thing that comes to mind is the monthly fee or the annual fee that you have to pay to be a part of that HOA. And really, what that monthly fee or annual fee is going towards is a pool of money to be used for the general upkeep of the entire property, right? So, on a monthly basis here in Wisconsin, that's snow plowing and shoveling. In summer, right, it's mowing the grass and trimming the weeds down and all that fun stuff. But that also goes towards the bigger maintenance projects like there's two buildings, each with four townhomes in our complex or our HOA. And they wanted to paint the house because it was very ugly. It was like Ronald McDonald, red and yellow. It was terrible. I don't know what the builders were thinking when they did that, but ours was like a nice neutral, like kind of tan and brown. It looks pretty nice, but they just wanted to match that, and really what we had budgeted for that unit or that building was the normal cost of upkeep, which is just one coat of paint to keep it fresh and to protect the wood. But the fact that they wanted to do a color change, they actually had to pay, those four owners had to pay for the additional cost to do that second coat of paint or to change the color. So that's something that we as a collective HOA voted on, and that was an expense for them, and they were okay with that. So yeah, those are just things to think about. But that reserve is really just there to help, you know, protect you in the event of like a major repair or bigger, routine maintenance things that come up. So you're paying that more in a monthly installment versus, this big thing happened and now you're gonna have to pay thousands and thousands of dollars like unexpectedly. And it's a good thing too to check how those HOA fees have changed over time, because I know it's been a conversation in our HOA where the fees haven't gone up in like 10 years, and inflation, y'all. Things are more expensive now. There's not even a dollar menu at McDonald's anymore. I mean, come on. So, there was some pushback from the group that they didn't want to do that, but we just have to be wise and understand that a dollar 10 years ago doesn't go as far as it does today.
And
Again,
that's
we could do a whole episode on inflation, right?
Yeah, and I think that's not uncommon where you get a lot of pushback from owners and HOAs to not raise those or annual or monthly costs, and then 10 years from now, all the windows need to replace in a condo building, and condo owner, each one maybe get hits with an assessment for $20,000 or something like that because the reserve is so low. So that I would say is a huge unexpected cost that I have seen in some buildings that are not well managed or building wasn't properly done, is you can get hit with tens of thousands. I've even seen hundreds of thousands before as a special assessment.
Yeah, and two, on since we already talked about it a little bit, just make sure that your agent or a real estate attorney like look through the actual insurance policy for the like common
Yeah,
structure to make sure that that's properly insured too. But again, I think we can get more in depth on that in a whole episode about insurance. We don't want to
definitely.
stretch people too thin today.
Yeah. Any other expected costs that you have come up with, Matt, or you've seen in the past?
I think that's mainly it. I mean, we haven't had too many other surprises, and yeah, I think it goes back a lot to like what we talked about in that first episode. Like you can have a lot more unexpected costs if you don't get an inspection. I've certainly seen that with clients where like they didn't even know there was a sprinkler system in their yard. They lived in Texas and there would have been like $25,000 of repair to that and
Yikes.
all those things. Yeah, I've seen like utility problems too, or service upgrades for electric,
Yeah.
those kind of things. But yeah, your realtor is really going to have a good beat on that if they're a good realtor.
Yeah.
And then two, I would recommend being in the inspection with the inspector, absolutely, and just have them like kind of walk around and feel out the house with you. So yeah, how about you? Any closing thoughts?
No, I think that's a great idea to walk through with both the real estate agent and the inspector to get a sense for what are those expenses that we likely will incur in the short term, medium term, and long term. That's something that as we've gone through houses, we started tallying and throwing on spreadsheets before we make offers of what will it cost in the future. Obviously, some stuff like, tree might fall down and topple a roof or topple a fence, and that might be an unexpected expense, but there's other things you can plan for.
Yeah, and even if you're not a spreadsheet user listening to this, I know we like those things, but a lot of people don't. That's I guess why we have our jobs. But I hope that today you just took away a few things that you can ask good questions about, and if there's anything we didn't address or comes up, like please reach out, or we'll be happy to answer it on a future podcast episode too.
Yeah, that's awesome, Matt.
Awesome. Well, thanks again for joining us, everyone, and we'll see you in the next one.